Hello, everybody. It's Jeremiah Davis, the funding coach. I'm back with you with my weekly lives. Had to take a little vacation. Uh, 4 days turned into 10 days, but it was much needed. I'm just now getting caught up with all the work that I had to um, needed my attention when I got back. But we're back, and I have just another show I want to do for you to educate you guys on business credit, business funding. Um, so today's question is business credit a must to be approved for funding? And the short answer is no. There are several different funding options that you can use those resources to fund your business. Um, what does business credit do though? See, that's the thing. I think there's a whole lot of confusion out here about the business credit and the business funding. Now, I kind of touched on it a couple of weeks ago with the misconceptions about business credit and business funding. So I'm just going back, and touching on that and expounding a little bit on it. Um, if you're a business owner, you need highly recommend that you build your business credit because business credit will give you more access to more funding resources. Okay, like business credit cards that are not attached to your social or your person. And if you build your business credit correctly, you can get some really high dollar um, business trade lines. Like American Express $50,000 card. Capital One $25,000, $30,000 business card, and with those cards, you can do things, pay for supplies, expand, marketing, all types of things that you don't have to use the business cash flow for, right? You keep your cash, put it on a credit card, and make payments like you would anything else. But a lot of those cards have low interest rates, or if you do pay it off, within a timely amount, they work similar to personal credit cards. So you can really gives you more options, gives you more flexibility to grow your business. So business credit is always a must. If you are a business owner, you need to establish and build and grow and maintain your business credit. I mean, you can mess up your business credit too, just like you can personal credit. So if you get some derogatory marks on your business credit, that would adversely hurt your business credit profile. So it's very important. But say you do got business credit, like I said, there are some financial resources, business funding that you can apply for because you have business credit and get approved for larger loan amounts because you have established business credit. But you have to have the right mix. You have to have the right trade lines. You have to have the right, business, a couple of business term loans on there, at least one term loan on there. And what the lenders are looking for is that other financial institutions have trusted you and you have managed it and maintained those trade lines. All right. So there's a number of different things as you build your business credit that will give you access to more funding options as well, other lines of credit as well. Now, if you don't have business credit, there are still funding options available for you, but not, it's going to be personally guaranteed or something like high risk, higher interest type funding. There's plenty of funding options out there. There's asset funding, there's equipment funding, there's inventory funding. There are so many different types of funding options available. I mean, even if it's collateralized with the real estate. The main things you need to know when you're coming in and you're looking for funding is find out what the qualifications and requirements are for that particular funding option you're looking at, and make sure that you meet those requirements before you apply for it. Okay, that's the key into not only knowing what type of funding options are available, but what the qualifications and requirements are. Where do I go find this type of funding at? Because like there's a plethora of equipment funding options out there, and they all have different types of criteria. Some of them they want to you to put your home up as for collateral or some other type of real estate. They want some collateral, like heavy collateral, to do that type. But if you're trying to get $100,000 piece of equipment, you can't really blame them. But there are other equipment funders out there that do not need collateral. You're just going to pay a higher interest rate. Now, the equipment itself becomes the tangible collateral, just like with your house or car. When you pay for it, you miss payments, they take it back from you. Same concept. And then there's always personal. Most of these types of funding options, you're always going to have a personal guarantee. So having good personal credit is essential as well, because that gives you more options to more funding options. Okay. Now, if you're a business owner, you have poor business credit, you have no business credit and poor personal credit, you limit your options. You have little options, and it's harder to get funding. Now, on the flip side, just because you have business credit established, right? You got some trade lines, you got an 80 on the Paydex, what have you, doesn't automatically mean you're going to get funding, because if your business is not cash flow heavy, all right, usually the minimum amount is $10,000 a month for your business to apply for some type of business funding. Okay, so my point is, this is the stuff you need to educate yourself on. And I know for sure there's a lot of misinformation out there, and it's more marketing. Other people, they're brokers or lenders, they're marketing to the masses, and it's more, to get you in the door and then see what you're working with. And 9 times out of 10, you end up in some type of personal financial product that might benefit you, might not benefit you. Okay, another thing is, if you purchase a business credit package builder, right? I've seen them go for anywhere from $2,500 up to $5,000. Just make sure you investigate the person or business that you're buying that service from, that they know what they're doing. Get some references, maybe even. And anybody that's charging up front, I want you to pay them several $1,000s to even go look for funding for you or get you funding. Those things are that's not the norm. Okay. I can't say all of them because I haven't done business with them. I don't know them all. But when I get somebody that calls me and tells me, well, I paid this guy $3,000 and he's supposed to build my business credit, and all they really did was went and applied for a bunch of personal guaranteed stacking business cards, and they got a bunch of inquiries, they got the DTI out of whack, and they only got a couple, maybe $10,000, $15,000, $20,000. But they had to pay $3,000, $4,000 to get that. That's not business credit. That's not funding. That's just paying somebody to do the work for you. Okay. So, personally, I think it's wrong, and I would never do that, or I'll do that to any of my clients and my customers. Okay. But if you're enrolling in a business credit builder program, it's going to take time. It's not overnight. Because you have to build that business credit in such a way that all the trade lines you apply for, you have to make purchases for, and then you have to make the payment, right? And then it has to report to the business credit bureaus, okay? And then once you have a number of those reporting, then you can go to the next level, and then the next level. And then eventually you're applying for cash cards solely on your EIN. And if it's done correctly, you should get anywhere from 3 to 5 times the card volume, the line of credit volume that you would normally get on a personal. So say, you got a $5,000 personal card. The business card should be $15,000 to $25,000 if you've done it correctly. Okay. But that might take you 6 months to a year to get to that stage. So you got to work with somebody that knows what they're doing, and be diligent about how you use it and make the payments. Because if you miss a payment, then you defeat the purpose, because then it's going to report as a late payment and you're still in the building stages. Okay. So now you've created another problem that you don't need. Okay. But that's what, as a funding coach, I'm going to find those type of those your situation, find the best path to get you to the funding that you need. Now, sometimes it might require we go in an indirect way, like people will come to me and say, well, I need a business loan, and they got a business and they got the kid, $10,000 a monthly cash flow through their business, but they got poor credit. So what are you going to do? Well, I can still get you some money. It's going to be a higher interest rate, and take that for now. We structure it so you can manage the payments, and then work on your personal credit to the point where then you can go for some better quality funding, and then pay off that high interest loan before the term is up. You're not going to keep the money for the whole 8, 10, 9, 12 months. You might have it for 2 or 3 months. Okay, then you can get out of that and then get you some different type of funding, and again, when you're in a better place. Okay, but it's a way to get there. And then sometimes you can get this funding option, use the money for whatever you need to do to generate more business. All right, and then at the same time, we can be building your business credit as well. So it's just working with someone that has the knowledge of the different funding products out there, knowing where to find those different funding products, knowing the qualifications and requirements of those funding products, and making sure you're working with someone who knows what they're doing. I mean, because there's a lot out there. And I've heard those horror stories. I work with so-and-so, and they end up coming back and being in a worse position than they was before. Okay, because they didn't do the due diligence. If it's too good, if it's too good to be true, it probably is. Okay, the banks and the financial institutions have not. Let me repeat this: have not changed their protocol. Okay, I just try to keep this thing in my head. If somebody's asking me for money and they don't have good credit, they don't have any financials, they don't have bank statements, tax returns, they don't even have the articles of incorporation, I'm not going to loan them my money. And none of us will. We barely want to loan money to our family members because we know they can't pay it back. The bank's bar is much higher. They're not going to loan their money out if they know they're going to get their money back, and that they're giving it to somebody that they can trust, that have proven themselves to be trustworthy with their business or with their personal credit. Okay, so is business credit a must to get approved for funding? Short answer, no. Better answer, it gives you access to more funding options. If you got a 90 business credit score and you got good personal credit and your company's got good cash flow, you got more options to choose from to borrowing or money or getting higher lines of credit. So it's highly recommendable that you manage your business resources, the cash flow, establish business credit, and have good personal credit. Put yourself in the best funding position possible, so you have access to it when you need it. Okay. And especially at this time, everybody should be working on their credit, building business credit, and focusing on keeping their client base. If they're starting a business or got a current business, you need to keep the cash flow coming. Be innovative, provide some different products or services, or provide your current products and services to a new demographic. And as you can see, businesses had more options to stay at getting money than those who didn't have a business. Okay, so I want to drop a link to the funding class that I got coming up. And this is where you will learn all the different funding products. You will learn the qualifications, requirements. You'll get a free ebook on all of this. And there's 2 classes. The first class is going to cover the most popular funding options. And the second class is going to cover the more elaborate, funding options like real estate, SBA, and PPP, and EIDL, and there's a lot of different funding options out there. And I worked with all of them, so I'm going to be teaching people in these classes what the funding option is, what the requirements are, and what the qualifications are. So click on the link, sign up for the class, save your seat. I'm expecting to be sold out, but this is information that you want, and once you have it, nobody can take it away from you. All right, this is Jeremiah Davis, the funding coach, and this is the Business Source. Thank you for watching. See you next week.